Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good afternoon. Welcome to Countdown right here on Bloomberg Quint Live. My name is Neeraj Shah, and the markets are doing okay for themselves. You have to argue that, or you have to say that we are down, but not out. However, from a point of strength, sometime early in trade, wherein right here, wherein we were trading in the green, we are back to being low in trade. I'm not surprised really. Actually, what the move was then was a bit of a surprise because the rest of the Asian pack too was down in the session today, and it was surprising considering 4 days before the exit polls that there will be some confidence in the bulls or the bears for that matter to take some substantial positions. Having said that, for now the tick shows a 17-point downtick on the Nifty 50, so that's part one. The bank Nifty is corrected a bit more, so about 0.4% lower, not at the lowest point of the day but certainly off, and the broader markets would have marginal corrections would have the last few days have led to some stronger corrections today. So about 1.4% for the mid cap space, the small cap space to 1.5%, and the market breadth would be looking slightly adverse compared to the kind of breadth we've seen the last few days, a lot more adverse, but close to 1:4 in favor of the declines, and the gap is only widened as the day has gone by. A clutch of stocks which are falling 9-10%. The broader market is actually the place to monitor, but let me do the large caps first and bring up what's happening here on the index. So Z corrects 6%. The sister concerns also have corrected. There were some expectations of some announcements coming about sooner rather than later. That hasn't happened, and the stocks have corrected. Eicher Motors about 5% down. There's weakness in India Bulls, Yes Bank, and that entire pack. All marketing companies have looked slightly wobbly. Larsen & Toubro post results has looked slightly weak. Cement companies have come off. Old economy by and large has come off. I don't know if it's courtesy IIP numbers or otherwise, but almost all old economy stocks have looked slightly wobbly. What has done well? Hdfc post numbers 2.5. HUL looks slightly better in trade today, about 1.3%, and Titan about 1% higher in trade. But aside of that, nothing to write home about when it comes to the large cap space. At least the index is punctuated by losses, but I guess that the mid caps and small caps are not too different either, Devina.
No, they're pretty similar actually. Like you highlighted, the market breadth was extremely negative, and a 1.5% drop in the mid cap index and the small cap index is nothing to scoff at. So just quickly pulling up, what's happening with regards to the movement within individual stocks. So start off with Oberoi Realty. This is a reaction to its numbers. Edelweiss Financial Services, remember, is back to levels of 165, 166 now after going down below that 150 mark. So that's a good comeback from Edelweiss. Tata Global Beverages, Bata India. So as you can see, Glaxo Consumer, GSK Consumer on the back of numbers. These are all slightly more defensive names that have come back into play in today's session. Future Retail, they're up about 0.5% plus. IDFC, First Bank, very disappointing numbers, and the stock started 7% lower, but it's dropped down to about 10.5%. Then you've got the likes of Canara Bank, Dish TV, 7.5% drop for Dish TV. You've got a Union Bank of India, which is down 6.5%. Adani Power, Punjab National Bank, 5.5% cut coming in there. From the small cap space, if you could just have that up as well, after seeing a drop now, the index is down almost 1.95%. Merck, a really good quarter, a good expansion of margin and EBITDA, and the stock is up 7.5%. First Solutions up 1.8%. You've got the likes of Century Plyboard, which is doing okay. Losers, Delta Co up a big heavy knock of about 11% on the stock. Suzlon is down, and we've got Strides Pharma, which is down about 8%. So a big move on the small cap index. Syndicate Bank also posted its numbers, is down about 6%, and Jet Airways, no respite for that counter, that continues to reel under pressure. But what's happening in the more liquid universe, in the F&O space? Navneet joins it with details.
Thanks for that, Davina. Well, if you look at the Nifty Futures, there has been a build-up of almost 4% at least in today's session. Remember last week when the markets were weak and we did witness some bit of selling pressure, there was no OI build-up seen of either for Nifty or for Bank Nifty Futures. Let's see if this remains towards the end of the day or not. And for Bank Nifty, open interest is higher, nearly 11% right now as we speak, and the premium is somewhere about 70. Important to look at India Volatility Index because it didn't rise so much throughout the week. It was up on Friday, but today it's once again seen an increase of nearly 3%, so watch out for India VIX. On the option side, throughout the day, we were watching out for that level of 11,250 on spot Nifty. We tested this level twice last week and the markets bounced back from there, but once again in the intraday session, we did breach that mark. We went to levels of 11,225 to 230, and there has been some bit of rebound once again coming from those levels. So on closing basis, at least on the downside, we'll keep that level. That's important to mark. But open interest in the call side has shifted to now 11,300 from 11,400. A lot of writing today, in fact, has come in for the 11,300 strike. And on the put side, what is active is the 11,200 put. So near-term range for the market does remain between that 11,150 to almost 11,300. Let me quickly highlight a couple of stocks for you which are in focus. Strides Pharma is one which came out with its numbers on Friday. The stock's fallen below its 200-day moving average in today's trade, and it's down almost 9% in trade, 19% higher when it comes to the OI build-up, indicating traders are building up fresh positions in this counter. The other one which is doing well is Bata India. It's I think 7 to 8% away from its record high levels, but still Bata has bounced back today. It's up 1.5%. Even in the future side, we've seen some build-up on the long side coming up for this space. Eicher is the other one which has reacted negatively to its numbers. We know that the margins were missed for Q4. Traders have been betting on the short side. The stock's down 6%, and of course the futures are trading with a discount of nearly 60 to 70 points right now. So fresh shorting seen there. And IDFC First Bank, which we've been highlighting, the counter has been under pressure post its earnings. It's posted a loss for this time, and 9.5% in terms of the futures open interest build up, telling you that there is some fresh shorting which is seen for this counter. But other than that, I just want to highlight Tata Global Beverages. Since morning, this counter has seen some bit of strength, and it has seen gains of nearly 1.5 to 2%. Some bit of long positions have also been seen for Tata Global Beverages. It's almost sitting with gains of nearly 2.5%. Devina.
All right, that is what's happening in the futures and options space. But like we've been seeing, there's a lot of movement on the downside, actually, what's happening within the broader market space. So it'll be interesting to see what turn the market takes at this point in time, at least. But if you can have the India VIX with the volatility up, we'll quickly tell you what's the shape out there as well. 27 now, so it's inching up further. Remember the last time we spoke about this on Friday with Hemen, his pre-election volatility, the last time around in 2014 or something, he said that it went up all the way to 38 to 39. So we're still a distance away from that, but nonetheless, volatility taking its toll in the broader market space as well as for some of the large caps. It's going to be interesting to take a look at what happens to the likes of an ITC. ITC, I don't think, has reported its numbers yet. So we're going to keep a close eye out on what happens to ITC once it reports its numbers. Remember, cigarette volume growth of about 7.5% is what's anticipated. But the bigger play here is going to be the FMCG business. The last few quarters, the focus has shifted towards the FMCG business. So I think about a growth of about 10 to 15%. That's a wide range, actually. But 10 to 15% in the FMCG business is something that the street will be watching out for. The stock ahead of that is down by just 0.25%. 297 is where that stock's trading at. But a complete washout of stocks, like we've been highlighting, that have not met street expectations or have not done well on their earnings performance. We spoke about a Syndicate Bank, we spoke about an IDFC First Bank, and the entire Z Group stocks, which seem to have been washed out in trade today. So ZTV, you've got a Z Enterprise, you've got a Dish TV, Z Learn is the other one to watch out for. Dish TV now down about 8% from 34.5, almost 35, and Z Learn is down about 1%. Not too much of movement. They're the volume's also looking highly tepid.
Yeah, well, I reckon the move in the Z Group stocks, courtesy some bit of unwinding that's happening in those counters after some build-up that we've seen better part of Thursday and Friday. So let's wait. I reckon this is in part due to that. Difficult to say whether this will continue over the course of the next few days or no. However, let's bring up our team of researchers to try and put perspective on some key news bits and some stocks that are to be monitored. Earlier today, we spoke to you about ICICI Prudential betting on incumbent telecom players in the month of April. On similar lines, SBI Mutual Fund too has played that bet about by increasing the stake in telecom players like Bharti and Vodafone Idea. On the other hand, SBI has reduced stake in some of the consumer staples in the month of April. Yash Upadhyay is here to take us through the portfolio rejig. Yash, good afternoon.
Good afternoon, Neeraj. That's exactly right. So telecom players is what we have seen again SBI Mutual Fund buying into in the month of April. And on the other hand, they have also increased their holding in the bank and financial names. So take a look at the stocks wherein they have increased their holding, and Vodafone India tops that list. Again, they have picked up about 12.5 crore shares there, courtesy of the rights issue that the company had announced earlier last month, along with Bharti Airtel, wherein about 1 crore shares were bought in the previous month, along with Kotak Mahindra Bank and Hdfc Bank rounding up the list. Interglobe Aviation squeezed in between of them, wherein they have bought about 28 lakh shares in the month of April. On the other hand, we have seen selling come into select FMCG names as well as the auto ancillary names. So ITC, Sandhar Technologies, Gabriel and Marico, all of whom have seen some amount of selling come in the month of April. ITC saw about 45 lakh shares being sold, along with SBI as well, 18 lakh shares gone there. But Sandhar Tech, Gabriel and Marico, all of them have seen selling of about 10 to 14 lakh shares in the month of April. On the other hand, we have a long list of stocks which make it to their list for the very first time, starting up with NIIT, wherein they have acquired 74 lakh shares, and Redington India, about 62 lakh shares added there as well. That apart, they have also picked up stake in Prism Johnson, V2 Retail and Neogen Chemicals, which was recently listed post its IPO. On the other hand, they have also reduced their holding, or actually they have completely moved out of select names, which includes the likes of Everest Industries, Sundaram Fasteners, Birla Corp, TV18 Broadcast, as well as Vinati Organics, which came out with extremely strong set of numbers today. Everest Industries saw more than 8 lakh shares being sold in the month of April. Sundaram Finance, Birla Corp, TV18 Broadcast, different various numbers of shares being sold over the last 1 month period. Back to you.
Okay, Yash, thanks for bringing in that information. But talking about the earnings, it was a subdued quarter for Eicher Motors. Yatin Mota is here to take us through the key takeaways from the company's con call, as well as what the brokerages are saying after the numbers. Yatin.
Navneet, if you look at Eicher Motors, clearly the stock is down 7.5% last time I checked. Despite the fact that the earnings were in line with the street expectations. In fact, if you look at the earnings conference call highlights, we had the management which indicated that, of course, there is, weakness in demand. The underlying demand trend is quite weak, given the fact that the inquiries also have gone down substantially for Royal Enfield products. In fact, if you look at the two-wheeler business for Royal Enfield, apart from the 650cc, twin models, we have seen general, weakness volumes for Eicher Motors in the past few months, which the management expects that to continue moving forward. As far as retail finance availability is concerned, that is not an issue. As suspected by the analyst community. So it's, some kind of a genuine slowdown which we are looking at as far as Royal Enfield products are concerned. For the commercial vehicle industry, the management of Eicher Motors does believe that, the demand trend remains weak, and the discounting in the marketplace is quite high, which clearly means that, the realizations for Eicher Motors, the commercial vehicle business also could remain under pressure. As far as brokerages are concerned, Kotak maintains a sell. They've cut the target price to a level of 16,200. This is almost a 2,200 rupee price cut versus the previous target price. Kotak believes that the margin downtrend would continue. SBI Capital also has a similar view there. They expect a 20% downside in Eicher Motors from the current market price. They have a target price of 16,200 again on the stock. They believe that the margin squeeze is likely in the short term, given the fact that the company is not able to pass on the cost hike to customers. And finally, we have CLSA. They have been maintaining the outperform rating with a target price of 22,500. But despite this maintaining of rating, they have cut the FY20 and 21 EPS by 12% and 14% respectively.
All right, that is on Eicher Motors, which is one of the top losing stocks in today's session. The other one that will report its numbers, and I spoke about it earlier, is ITC. It will be reporting its fourth quarter numbers today. Growth other than cigarette business, is likely to be subdued with a slowdown in the FMCG and the agri business. Agam Vakil, he's here to take us through what the street is pricing in for ITC. Agam.
That's right. Well, we're expecting a steady quarter for ITC. Starting off the top line, we are likely to see 12% growth when it comes to its revenues. Expecting expansion EBITDA margins by as much as 170 basis points to around 38.7%, and consequently, we could see profits rise by as much as 12%. Now, while the company does not report cigarette volumes, the street is working with the cigarette volume growth of around 7%, which is considered healthy and a much improved one year on year. It's 7 to 7.5% to be precise. While we do expect 10 to 15% growth in the FMCG sector as well, in the segment as well, there could be a slowdown which may be evident on the segment as far as ITC is concerned. If you go by what we have seen in some of its peers in the quarter gone by. We are expecting, again, strength as far as hotel business and the paper and paperboard business is concerned, but there could be weakness in the agricultural sector. And finally, when it comes to its raw materials costs, so we could see some amount of pressure on gross margins, but on the whole, we're expecting a very strong quarter for ITC.
Thanks very much for that. That is ITC, and you can expect the numbers within this period. Let's now welcome a global voice. Nikolaos Panigirtzoglou of JPMorgan is joining in right now on the show. Nikolaos, thanks very much for taking out the time. Your reading of what's been happening in the US with the trade tariff and the trade wars and the impact of that on emerging markets, particularly the likes of India as well, and whether or not we would actually have a significant impact because of this. Because the last time, the previous few times where the trade tariffs have been increased, India has somewhat remained insulated from that.
We are in a state of flux right now in terms of global markets, and there are similarities to last year. Trade wars are a problem. The Fed is a problem. Last year, markets were nervous about the Fed tightening. Now markets are asking the Fed to move one step further and not only stop the tightening process, but actually reverse tightening. And we have one rate cut almost priced in for this year and another rate cut priced for next year. And the strength of the dollar, quantitative tightening still continues. It will continue until September, and that is putting upward pressure on the dollar as a background force. We saw that in April. So significant increase in the US dollar, in my opinion, largely driven by QT, quantitative tightening. The Fed's balance sheet shrinkage manifested itself via reserve reduction of around $160–170 billion in April, and that put upward pressure on interbank rates at the dollar. So we have these three problems we had last year. Trade wars, the Fed, the strength of the dollar, and that's obviously not good for emerging markets. And emerging markets have an additional problem right now, that we haven't moved yet to a capitulation phase we had perhaps by the end of the summer of 2018. Last year, last summer was very had negative, very negative price action for EM, and EM saw some sort of capitulation. As a result, when US equity market started declining from October onwards, EM was relatively insulated. Right now, we don't have that benefit for EM. EM saw some strong inflows in January, February, March maybe. These inflows started flattening out and maybe turning negative in the most recent week or two, but we haven't seen the capitulation we had last summer, so EM as a whole doesn't have this technical advantage.
Nikolaos, just come in with regards to allocations of foreign money and whether or not you feel that there has been a little bit of a reduction or probably a stance where foreign money is right now on the sidelines. Allocations to emerging markets have not gone up in a big meaningful way yet. There are some uncertainties. The election outcome in India, the trade wars and the impact of that on the economic growth in China. So all that, do you think foreign money is getting withheld a bit more?
I think, as I said, we had some strong flows in EM in the first quarter. The signs we are seeing right now, the momentum in these flows is turning negative. And that's also true for the Indian equity market. We've seen some outflows over the past week or two. So the current trajectory is not benign for emerging markets. But as I said before, more importantly, what I fear so much is not so much the retail flow, but the institutional flow. The fact that institutional investors haven't capitulated in the same way they had capitulated in the summer of 2018. And that's why I don't see here any advantage for EM relative to developed markets if that correction escalates from here. While last year, when we got that Q4 correction, EM actually outperformed. EM currencies were relatively stable. I don't see that happening in the current conjuncture, assuming again that the correction gets worse from here.
All right, Nikolaos, we'll leave it at that. Quick comments coming in there from Nikolaos of JPMorgan. Thank you so very much. Appreciate it. For the equity markets, things are not looking all that great. The advanced decline ratio seems to have worsened, closer to 1:4 in favor of the declines right now. So 339 stocks advance and declines about 1,200 odd stocks. Neeraj.
OBC numbers on your screen, just very quickly mark them. The stock has moved into the green. Remember, the PSU Bank Index is deep in the red. This one, because of the numbers that they've put out, and optically the numbers look okay. There's a net profit number of 200 crores versus a loss in the corresponding quarter last year. And as a result of that, the stock has moved into the green. Let's wait and watch. The asset quality numbers would be keenly watched out for. Those would determine what the stock does during the course of the afternoon. Gross NPAs have improved, as a percentage at least. They have come off on a quarter-on-quarter basis. So doesn't seem to be too bad, the entire performance, but the granular details would help. For now, the stock marginally in the green. What came out with a rock-solid quarter, though, was Vinati Organics. The quarter 4 revenues were up 39%, net profit was up about 60%. So it's been a strong reported number. Margins are the main feature, really. About 1,000 basis points or a 10% expansion on EBITDA margins is no mean feat. Let's get in. Vinati Mutreja, she's the managing director of Vinati Organics, joins us right now on the show with her thoughts on what's gone right in the quarter and what the outlook ahead could be like. Vinati, good having you. Thanks much for joining in. You have guided to certain near-term triggers which could take the performance higher, but the operational performance was very, very heartening. What happened in the quarter, and how do the next few quarters look like? Vinati, can you hear me? No, I don't think we have the management. We'll try and touch base in just moments from now. This should be up any moment. Okay. Okay, Vinati, can you hear me?
Yes, but there was some other...
okay. I hope it's sorted now.
Yes.
It is. Okay, great.
So I was saying, so
congratulations on a quarter. Yeah, please fill us in.
Yeah. The main driver has been the growth in ATBS, where our market share has increased from 45 to 65% on exit of our... We are running at full capacity. There's a shortage of the product in the market. And so to address that, we are adding a new line, expanding capacity further by 50%. So owing to that, even the next few quarters look very positive. We expect to maintain similar margin levels and see some growth revenue coming from ATBS, as well as a plan that we are starting in June for butyl phenol, which is entirely a new set of products for us.
Okay, I believe that plant goes on stream in Q2 as well. But this capacity, I just want to stick to ATBS right now. This capacity expansion that you spoke about, expanding it by 50%, I reckon that will come on stream with a bit of a lag, right? 4 quarters or maybe longer?
Oh, no, it will be ready now in July,
Okay.
the line. And now, of course, that should take care of the ATBS demand for the next 2 years. So expect in first year that we would do, about 30% of the expanded capacity, and then the next year maybe 65, and then finally 100% capacity.
Please correct me if I'm wrong, but there is also a greenfield butyl project which which commences in Q2.
Yeah, that is the butyl phenols. Now, those are 4 types of products which we will be making from isobutylene, which we are already the largest manufacturer in India. Now, these butyl phenols are used in fragrances, plastics, resins, and there's no manufacturer of butyl phenols in India. So we will be the only producer of these products here. And that has a revenue potential at 100% utilization of about 350 to 400 crores.
Okay, so organically or without these capacities coming in, I believe the uptick in prices would anyways bring about a top line growth for you. And Q2 onwards, if I understood you correctly, both the butyl phenol capacity as well as the enhanced ATBS capacity, whatever portion goes on stream, will come on stream. Therefore, that adds additionally to the top line, right?
Now, uptake in prices, we are not factoring in. We are assuming that the prices remain at this level. Or prices vis-a-vis the raw material prices. Of course, it changes based on our input prices. So we don't expect any increase.
I'm just
That's
wondering,
what you are.
No, compared to the base, Vinati, I believe that explosion that took place in China about a month and a half ago would have resulted in a shortage for a lot of products that Indian companies make. Do any of your products get impacted thereof, and therefore on a Q1 to Q2 YOY basis, would the top line growth anyways look enhanced? You've clocked in 40% already in Q4.
Yeah, none of our products have been impacted because of China. Because you have to understand China, whether it is IBB or ATBS. So the explosion that you're talking about or anything that is happening in China has not affected our products, or that is not the reason for our margin improvement or uptake in products.
Okay. So in light of this, would you believe that your performance in FY20 because of enhanced capacities as well would be, in terms of growth numbers, could be a lot better than what you've done in FY19 or FY18?
Well, we are expecting, I would say you take a 30 to 35% volume growth for FY20, owing to, growth coming from ATBS as well as butyl phenols. And profit should be in line with that.
Vinati, just 1-2 questions from my side. The incremental capacity which comes on board this financial year from ATBS, what would be the capacity utilization of that?
Yeah, so I'm assuming about, 35-40% in FY20. To say 70%, 75% in FY21. And then maybe 100% in FY22. Like that I'm assuming for the new line.
Okay, and the new product which comes on stream, that's butyl phenol. Could you tell us what sort of margins would you be garnering from there? Is this product going to be margin dilutive for your blended margins for the year?
Yeah, so butyl phenols have relatively lower margins there because they're also into the country, so we'll be competing with imports. Now, we make an investment based on ROI, and it's a project of 250 crore investment. So, one can expect EBITDA levels of, say, 50 crores or so based on a 20% ROI at maximum utilization, which is the asset turnover is higher. The revenue potential is 400 crores, is dilutive to our existing portfolio.
But you reckon that you would still be able to maintain the 40% EBITDA margin for the year at large?
next year going forward, 35% is more sustainable in the long term. Maybe even anything between 30 and 35 for FY 2021, 22.
Okay. And from the looks of it, you won't need to raise any kind of equity funds to fund any of your capacity expansion plans?
No, as of now, all our expansions and projects are being funded through internal accruals itself.
Okay. One last question from my end, at least, Vinati. Is there any chance of prices coming off? A competitor has moved out and therefore you've increased your market share. I reckon prices have stayed stable. Can they come off from the levels which they are at, for ATBS in particular?
I don't see that because there's no new competitor coming in ATBS. Also, there's a good demand for the product. The price movement, the raw material price really. I am not foreseeing any major changes in on the pricing front for either of our products.
We'll leave it at that. Vinati, thanks so much for taking the time out and congratulations on a good quarter.
Thank you.
Well, that's Vinati Organics, very strong quarter. The stock has run up in anticipation of this because they're going ahead as per guidance, and which is a bit of a pullback in that counter today. Bata is at 1779. It traded early morning, close to life highs. For now, lying absolutely flat.
All right. Let's bring in our market guests then. We've got Hemen Kapadia of KRChoksey who's joining us on the show. Along with him on the technical side, we have Sumeet Bagadia of Choice Broking. And joining us on the fundamentals is Sumeet Kalra. Good afternoon to all of you gentlemen. And I'll start off first with Hemen and the levels that we are at right now. Hemen, we've been talking, we spoke on Friday as well about the weakness of the market. It just remains unabated. We've got this, we talked about the strength that April brought about, but the weakness of May seems to be superseding that.
Well, very good afternoon to you, Devin. Absolutely right. I mean, normally May has been a very iffy month for the market. We've had lower circuits being hit in May, one upper circuit. But frankly speaking, it's a bit strange. We're not seeing even a dead cat bounce, which is, I don't know. Okay, VIX is 27. We are on our way to 35 and 39, so not very surprising. And if you look at the options data, Devina, it's woeful. I mean, you saw the maximum OI in calls at what, 12 lakhs, and next series at 7.5 lakhs, and the put at what, 23 lakhs. I mean, this is probably at a 3-4 year low. I think Navneet would probably know that better, but it's obvious. And yeah, there has been significant OI reduction on Friday, Devina. We saw Bank Nifty position being cut by 8.5%, Nifty 5.5%. I think I see that as a short covering because the rollovers had been good and we've seen open interest coming down. I clearly see that as short covering and profit booking. So frankly speaking, notwithstanding this VIX, which is obviously has gone berserk, will continue to go berserk, I feel we are overdue for a 150 point bounce, if not 180 point bounce. So stocks are falling like 9 pins, but I have a feeling it's been overdone somehow, and a recovery, maybe a faint one, a dead cat bounce is around the corner. So one, I wouldn't short at this level, no way. I'm not sure if selling puts is a good idea because if the VIX goes to 35, we'll get slaughtered just in the VIX rising. So I don't think even selling puts is a good idea. I just go plain vanilla, high risk, long as far as the Nifty is concerned, Devina.
In the futures?
Futures.
All right. Sumeet Bagadia, what would your index call be?
Hi, good afternoon. Well, see, markets have given a good correction in last couple of weeks. I think immediately looking at the chart, it seems that Nifty should take support at around 11,200 levels. Till the time these levels are not taken away, I think we can see a bounce back move or pullback move till 11,300 or 11,350 levels. And once 11,350 is taken on closing basis, then we will see a good move for the targets of 11,500, 11,700 levels. But at present, for a trading perspective, for next 1 or 2 days, one should initiate long positions with the stop loss to be placed at 11,200 for the upside target of 11,300 and 11,350 levels. And as far as your Bank Nifty is concerned, Bank Nifty is also looks like that it can give some bounce back move from present levels for the upside target of 29,200, 29,300 levels. 28,700 should be the stop loss for long positions for the bounce back and pullback move till 29,200 and 29,300 levels.
Okay. So that's the call on the index. We'll get in specific stocks queries in the moments from now from our guests. Also, Sumeet Kalra's thoughts on the fundamentals also coming up in just moments from now. But pull up the stock price of Hdfc. That's done remarkably well post its numbers. Up almost at the highest point of the day, 2%, 1972 and counting. Remember, their profit went up about 27%. Usually, you don't see Hdfc doing that on the upside. It's usually that 20% growth, standard, steady state. This time around, they've done that. And as a result of which, I think the numbers have moved up. The press conference, Keki Mistry was pretty positive too. But the point is, what does he have to say to specific queries? Vishwanath Iyer spoke to him. He's, of course, the vice chairman and CEO of the company. And in the interaction, started off by asking him about the company's loan book growth going forward, because that is the most fundamental aspect about what the NBFC will do over the course of FY20, the loan book growth. Herein.
I want to make futuristic statements because everything is dependent on how things happen in the system. But we would take quarter on quarter. Our focus, even in the first quarter of this year, continues to be largely on individual loans. It's not that we are not doing non-individual loans. Non-individual loans grew by 8% during the year. Individual loans grew by 17% on an AUM basis. Non-individual loans grew by 8%. But the larger focus has always been on individual loans. That has been historical HDFC's policy from inception virtually, that our focus is largely on individual loans, and within individuals, more on the affordable housing segment.
Talking about the affordable housing segment specifically, now there were some concerns raised about the quality of the book and the likelihood of default in very small amount of loans. Are you out of that bracket completely?
We don't do those very small loans. I explained to you during the press conference that we give loans to both lower income group people and EWS, economically weaker section people. In the EWS category, our average loan size is 10.1 lakhs, 10 lakh 10,000. In the LIG segment, lower income group segment, our average loan is 17 lakhs and 50,000 rupees. So it's not 3 lakh, 4 lakh loans which, according to some research reports, were causing some concerns in the market.
Fair enough. Another question about your corporate loan book. Now, you said that has degrown this year by about 5%.
The outstanding loans on 31st, if you look at the incremental growth in the loan book, yes, the loan book has degrown by 5%.
And that is going to continue for a while?
I can't make futuristic statements. I mentioned that to you earlier. Sure. It depends on how the market plays out. If the market plays out, the appetite is there, yes, we are happy to push that.
Fair enough. Recently, there has been a statement by the Ministry of Corporate Affairs talking about stress test or an AQR sort of review of NBFC books, because they feel that there's going to be some kind of a stress period coming in for that sector. According to you, you think that will help, or will that end up exacerbating the problems much further?
I mean, to my mind, it's not going to make any difference as far as HDFC is concerned, because as I explained during the conference, we do significantly higher provisioning than what is required by regulation. Just to put numbers in perspective, our total provision we carry today is 5,880 crores. Against, if you go strictly by what the regulations today prescribe, it would be 3,220 crores.
Fair enough, but considering you are one of the largest NBFCs out there in the market, so just to get a sense of what it means for the sector as such.
I mean, you have to look at each NBFC's book or each housing finance company's book and then be able to make a statement. I think really stressed loans, I mean, there are different definitions of what is stressed. Really stressed loans, I think, to my mind, most of the housing finance companies or NBFCs would really recognize that. Now, technically, you can always have some argument that, that this is stressed and this is not stressed and stuff like that. But generally, people would be accounting for whatever they have.
So this talk of a crisis within the sector, that is unlikely, would you say?
Well, I'm not talking about what is likely or what is unlikely. I don't think there is a stress on asset quality as far as the NBFCs are concerned, but I don't deal with the NBFCs, you do. Sure. So you would know that better. Sure. But my suggestion would, I think the stress, if any, would be more on the liquidity side, because NBFCs are not able to my mind, get money with the same ease as they were getting in the past. And therefore, we've seen that in the last couple of quarters, a lot of NBFCs have been selling their assets to pay off their loans. Sure. But I think the bulk of the problem, even on the liquidity liquidity side is over. I don't see liquidity also to be a big cause for concern.
Fair enough. You said that you had slowed down in FY18 the sale of loans to HDFC Bank, but this year you picked it up. Could you kindly explain the reason behind that, sir?
See, the reason behind that is that, first of all, we have a mortgage sharing arrangement with the bank. The bank sources loans for us. We do the credit, legal, technical checks. We disperse the loan, and then we have an agreement with the bank that they can buy back up to 70% of these loans. Now, there was a view that was there last year, prevalent. There was no constructive view, but there was a view that some of the tax consultants had said that when you sell a loan, the sale of loan could attract GST.
Right.
Now, when you're selling a loan, you're not selling just the profit margin, you're selling the entire gross loan amount. Right. So if you impose GST on the entire gross amount, the whole process of securitization just dies down, comes to a standstill. But because there was no clarity on this, we decided as a matter of prudence that till clarity comes in, we will not sell any loans and the bank will not buy any loans. So there was a big backlog of loans that usually in a year we sell about 16,000 crore worth of loans, usually 16,000 crores of loans. Last year we sold only 4,800 crore worth of loans, which was all done in the first quarter. 70, as you know, GST became applicable from July 2017. So till clarity came on GST, which actually came only in, I think, the quarter ended June 2018. Only after the clarity came did we start selling loans again, and therefore the backlog which was created in the previous year got sold during this year. So the total gross sale of loans this year has been 25,150 crores compared to 4,853 crores in the previous year.
Lastly, on the overall asset quality position of HDFC at this point in time, you've seen a quarterly decrease in the gross NPA ratio.
I would not go so much by a 3-4 basis points change in the ratio. But this number can go up 3-4 basis points, can come down 3-4 basis points. It's something we need to be watchful of. We always provide much more than what is required by regulation, just to be doubly sure that theoretically if the NPL number in any quarter in future were to rise, we carry enough provision to ensure that there is no hit in the P&L account.
All right, that's Keki Mistry there, the management of HDFC Limited, talking about the financial performance of the company this quarter. The stock is up about 1.8% right now, though it's taken a marginal tilt down at 1965 at this point. Sameer Kalra is also here with us. Sameer, a quick word on HDFC.
So I think numbers were good. Dividend income also helped them on the top line. And they're gaining market share. I think this is the ideal time for HDFC to gain market share because their cost of funds is still not increasing as compared to other, even larger NBFCs. So I feel there is another 10 to 15% kind of a upside in short term where you can form at least next 2-3 quarters where there will be a lot of market share gains for them, and they've already got approval for around, I think, 1.3 lakh crore NCD issues. Wow. So I think almost 80 or 70% of the liquidity is getting squeezed by HDFC right now, which gives them a good amount of cushion to work on.
Okay, that's the view coming in on HDFC. Good set of numbers. But before we proceed, let's get you some technical strategies from our experts. Hemen, which are the stocks that you're recommending in trade this afternoon?
Yeah, I have a buy call on Godrej Consumer Navneet at 640, stop loss 632, target 656. And a buy call on Reliance Industries at 1240, stop loss 1230, target 1260. Short-term bounces are what I'm playing for, and basically long on Nifty also, Navneet.
Long on Nifty as well, with
yes.
target price?
I'd say 50 point stop loss and 125 point target in the next 3 trading sessions.
Okay. Sumeet, what about you in terms of individual stock ideas?
2 stocks for the day, both are on buy side. The first one is from banking space, and that is Axis Bank. After a correction of 7 to 8 days, it seems that Axis Bank can take support of a lower band of Bollinger Band, and the support is placed at around 728 levels. That should be the stop loss for long positions. One can initiate long positions at the current market price for the upside target of 750 and then 760 levels. The second pick for the day is Tech Mahindra, that is from IT space. most of the IT stocks are looking good to me. Tech Mahindra looks like that it can move up from present levels, and on higher side it can touch levels of around 830, 840. One can initiate long positions at the current market price, or on dips in prices till 815 should be used as buying opportunity, with a stop loss to be placed at 809 on lower side for the upside target of 830 and then 840 levels.
Okay, ITC number. ITC, just hang on, Sumeet. We'll talk more, but ITC numbers are up on your screen. Revenues at 12,210 crores, those marginally ahead, but the expectation was of 11.7% uptick. They've come in maybe the number which is about 12.5 odd. The net profits are bang on in line with estimates. The estimates were 3,241 crores, which would mean a growth of 10.5. I have delivered 3,240 crores. So the bottom line number is exactly in line. The top line number is marginally ahead, but you would largely reckon that this number on that base means that it's an inline set of numbers, and therefore I wouldn't be surprised if the EBITDA margins too stay at about 38.7 odd%. That is what the estimates were. Let's wait and watch what happens. Now we'll watch out for the volume numbers to come out. The cigarette volumes were seen at 7.5, at least as per brokerages, and then the ex-cigarette growth as well to be focused on. Don't have other numbers as of now, but for the revenue and the bottom line. But Sumeet, you want to come in with a quick initial thought? The stock is reacting marginally positively, but that could just be trading sentiment.
Yep.
Otherwise seems to be an inline set of numbers.
Yeah, so it's supposed to be inline now, and I think the volume growth of cigarettes are the more important creation out here, because quarter on quarter you're seeing that 7.5%, 8% kind of a growth. Now if it sustains, and I think in consumer sector it might outperform and give that space for kind of valuations to come up. And yeah, so I think even on the pack side it's a good enough number from my side.
Okay. The bottom line numbers.
3482, I think that's what the press release has been stating, and we were expecting a figure of 3241. So it is a slight beat when it comes to the bottom line numbers as well. Remember, for ITC, what the market keenly watches out is for the cigarette volume growth, and I'm just looking at the EBIT from the cigarette space. Remember, cigarette contributes nearly 80 to 85% to its bottom line, so it is the most important segment for ITC. 3856 is the EBIT for the current quarter versus 3557. EBIT margins will be more important to watch out, but there is a growth which is seen. Even sequentially, EBIT has gone up for this one. The other one is hotel, which is seen a turnaround in the last few quarters. So the EBIT from the hotel business is at 88 crore versus 60 crore. And the other non-cigarette FMCG segment, that has reported EBIT of about 130 crore. And there is some bit of adjustment there. There is restructuring of lifestyle retailing business. So there's a note given for that. So there is profitability which has been seen for the non-cigarette FMCG space as well. But we'll get you the volume growth number from the cigarette space and also the EBIT margins. I think that will be very important. Samir, I think the street was watching out for a volume growth figure of about 6 to 7%. If I'm not mistaken, they did take 7.5. They did take price hikes in the quarter gone by, and that was not on account of any sort of tax increase. So a figure of 7 to 7.5%, if that actually comes by, what sort of gain would you expect on the stock then?
So I think another 15% is something which is potential out here if it meets the estimates from my side, because if you see the valuations right now and the volume growth, even on the FMCG revenue growth, which I have no access to right now, but if I see that, if that has improved even quarter on quarter, I think that gives it a good push up to match up to certain extent of valuations with HUL, or reduce that gap which is running at 30 to 40% right now.
All right. So at least on the profit side, I mean, you're seeing that kind of an uptick and the beat to the expectation. Remember, the last few quarters, there was some amount of a tilt and focus with regards to whether to see a pickup in the FMCG business or no, in tandem with what the rest of the pack has been doing. Though ITC is mainly focused on the cigarette revenues. It doesn't give out its volume numbers, but that about 7.5% is something that the street is expecting. The stock, however, fails to do much, and as you can see, that's exactly what's happening now as well. It trades in an extremely tight range, and even an earnings reaction seems to be a knee-jerk reaction. It's come right back down. 296 for ITC right now, after it got that initial pop there, went up to 298 odd, and now has come back down in the red, and that's a sharp fall actually. So goes to read into that and into individually and how each of the segments have done. Basically, their hotel business, their FMCG growth. This time around, obviously, it was an expectation that the FMCG business, in tandem with the rest of the consumption space, would actually take a slight bit of a hit. Industry slowdown would hamper the FMCG growth for them, and probably, I mean, I don't have those numbers yet, but that's something that you could even watch out for. But down about 0.5% from that initial pop.
I think we've got Agam mic'd up, so that key important. Okay, not yet. We'll be getting Agam in a while, but I think.
Guys, I'm just interested in knowing the revenue numbers are in line with what we were working with, maybe marginally higher. Margins are actually lower than what our estimates were, and yet the net profit versus expectations of 10.5% uptick is up almost 19%. So surely below the operating line, there have to be some items which has led to 19% uptick, despite the revenue growth being largely, as I said, in line. 11.7% was the expectation. The growth number is about 13%. So, and margins have come off, by the way, compared to what was estimated. So below the operating line, maybe some numbers that have led to this move. While just okay, Agam is here. Sorry,
yeah,
Agam is here. Let's just cut across to Agam and try and figure out what has he made of these numbers. Agam, bottom line much higher than estimates. What is the fine print looking like? What numbers do you have?
Well, actually, I'm going to go through your segments, and that's where we are seeing a little bit of weakness, at least as far as when compared to your expectations. So the cigarette business has seen about 13% growth, and the likelihood that Street was expecting about 7% volumes growth to come true is a possibility, considering we must remember that ITC has taken price hikes as far as cigarettes go. FMCG is the big disappointment, at least as far as growth is concerned, because we have only seen a 7% growth, and FMCG is where most of your investments have gone in. So the slowdown that we've seen in ITC's peers is evident in case of ITC as well in its food business specifically, considering we just seen a rise of 7% against expectations of a minimum 10%. If you look at hotels, 25% growth in line, but it is not one of its larger segments. And we were expecting weakness in agricultural business, but that's seen a 16% growth, as was the case for paper as well. So the big disappointment clearly is with the FMCG excluding cigarettes business, where while we have seen an improvement in margins, the growth itself is not encouraging, and that's possibly why we have seen just a little bit of a miss on the overall numbers.
Thanks a lot for that. So 7% growth in FMCG, that's a disappointment versus a street expectation of FMCG ex-cigarette 10 to 15%. So that's nearly the upper end, a half of what the street was expecting. But, this is an important area. Much of the focus is now being driven into the FMCG segment as well. And Sameer, just, comment on this part. Last 3 to 4 quarters, I mean, while obviously the cigarette business volumes are important, but the drive behind FMCG was being pushed. And that's not revealing any results even today.
But as far as I see the numbers, the EBIT has gone almost double from YOY, from a 77 crores to 130 crores. Removal from the 70 crores extra which is there on the lifestyle business. So I think they are now focusing on restructuring the whole business. So because of this restructuring of lifestyle retailing, there might be some impact on the revenue side as well. Because if you have a closure on certain stores or certain places, so that will not be comparable like to like. So I think let's wait for details, because as numbers say, I think FMCG is picking up for them. And I'm more concerned of a bit on FMCG rather than the revenue growth as of now.
I think Darshan was highlighting about the tax rate. So for the quarter gone by, I think 30% versus 33%, that was the tax rate in the corresponding quarter. Probably that's one factor which has boosted the bottom line. And the other one, other income is at 740, but nevertheless in the corresponding quarter also other income was on the higher side. The other expenses, remember ITC doesn't give you a breakup of their ad expenses or marketing expenses. So they have been higher, 2044. In fact, they've been higher if you compare them sequentially or on year-on-year basis. So definitely other income has been on the higher side, and margins you mentioned, Neeraj, were not at par with what at least our poll was throwing about.
100 basis points. 38.7.
Yeah. I mean, 100 basis points.
So
lower on a YOY basis.
Yeah. So lower tax rate, higher other income may have boosted the bottom line, but higher other expenses may have suppressed the operating margins.
And I wonder, Sameer's point about the EBIT having grown is one point, but the pressure that the FMCG space by and large is facing, whether it's due to higher base of volumes or otherwise, but the number is certainly subpar compared to what the street was working with, and I think that's the point that maybe Devina is trying to make too. The stock is probably showing that, 2.5% lower for ITC right now. Just got to probably figure out what kind of valuation and the sum of parts comes to the FMCG business. And if that's under stress for most of the other players which are more efficient than ITC, what could ITC
then it's
do
a bigger,
as well?
bigger
It's a drag. It's a drag. So I think if that number is actually there on a like-to-like basis, then there is a slowdown. But I think the cigarette volumes can really impact it up. So generally it comes next day morning or by the evening or close of the markets. So I think if that gives you a bigger surprise, then the whole this kind of a downside becomes an opportunity. So I think let's wait for that. Let's not jump the gun and then
completely agree. Now, but Hemen, while we don't want to jump the gun, do the charts indicate anything? It's down about a couple of percentage points, ITC.
Yeah, I think Neeraj, what has happened is that we've seen some sharp OI built up, and that seems to have gone down, and we at the support level of 290. We've been in the range of 290, 310 for the past 2 months. If it breaks 290 from a closing point of view, I think then there's trouble.
Okay, well, let's wait and watch for ITC. By the way, before we take that break, I think the other big one, guys, that we got to monitor, one is of course Z, which is you can't quite place a handle on, but Eicher Motors is down 7%, 18,935. This must be multi-year lows for Eicher Motors. I think if we can we'll try and tell you how or what quantum is this one lagging the nearest price, but this must be multi-year lows for Eicher Motors for sure, and it's declining on fairly severe volumes. Is Eicher Motors? Let's wait and watch what happens to this one as well. Sumeet, Bagadia, just before we take that break, a call on Eicher Motors as well, which is down 7%. How much lower do the charts suggest it can go to? Sun Pharma, by the way. Sorry, just Sumeet, just before I come to you, just want to mark there's something that's just suddenly happened in Sun Pharma. It's a sharp drop. It was nowhere in the picture, and suddenly it's down about 8.5%. I don't know if this is a flash trade or some news that's come out, which at least we don't have as of now. None of us in the studio probably have it as of now. There's just a substantial sudden drop in Sun Pharma. I wonder if Spark is also showing that. Sun Pharma Advanced Research 10% lower for Sun Pharma now. This doesn't, Sun Pharma Advanced Research down about 6%, 7% now, but Sun Pharma is the big one. While we're talking about ITC and what's happening there, 11.5% for Sun Pharma. Something's happened somewhere which has led to this stock just come off the cliff very, very rapidly. 390 and counting for this boy, and are right now the top loser on the index by a margin really, and just came out of the blue. 11.5% and counting, 12%. Okay, I fear the longer I continue with this, it may just fall, keep on falling. Okay, I'm told Wockhardt is also falling, but a separate kettle of fish altogether. But a big drop in Sun Pharma. Were we anticipating anything, guys, on Sun Pharma? Sameer, any thoughts here?
Maybe the results or something.
Results, I think, on 27th or 28th of May.
I don't know if there's a new twist to the corporate governance issue. But they had earlier on said that they're going to formalize a corporate governance and ethics committee to overlook the dealings within the company. But I don't know if there's
maybe
an angle of.
Can see anything on.
Can you Hemen? 11.5% for Sun
Check
Pharma.
On the OIs. Check on
80 lakhs almost of volume, which is really huge. But I am not seeing that much of a short built up yet.
Yeah, because this is just a sudden drop that's come right now. Maybe the build-ups happen right now, but yeah, the cash market volumes have suddenly shot up for sure. It's already 83 lakhs as we speak, so it's price and volume action, and now 12.5% or 13% lower. The story of the afternoon, guys, I would like to talk about ITC and Eicher. It's now turning out to be Sun Pharma. It's a big move and a sudden and sharp move. We'll try and talk about this in greater detail. Sumeet, sorry, while we were talking about it, I don't know if you have a thought on Sun Pharma or maybe even on Eicher Motors, which is down about 6%.
We have seen a sudden correction in Sun Pharma. It has broken the recent lows. It's trading below 400 levels. I think the immediate support for the stock is placed at around 370. And if the stock is able to break 370 this time, then there is a possibility that we might see extended sell-off till 350, 340 levels. 370 is the immediate support for the stock. Till the time these levels are not taken away, there is a hope that Sun Pharma can find support near 370 levels and we can see some pullback or bounce back. It's better to avoid fresh selling at the current market price. If a closing below the support levels is seen, then there is a possibility that we might see extended sell-off. At the same time, Eicher Motors is also looking weak. The immediate support for the stock is placed at around 18,800 levels. Once 18,800 levels are taken away, we can see extended sell-off till 18,200 or 18,000 levels. So it's better to avoid long positions in both these stocks.
Okay, 18.5 for Sun Pharma now. This is unraveling with a speed that most traders would not be able to grasp. And, 2 minutes ago, guys, Hemen spoke about volumes at 80 lakhs. They are already at 11 million. That's one exchange cash market volumes. I guess now the F&O volumes would also be picking up steam, but there's something brewing out here which somehow I can't place a handle on. You got to believe us. We're trying our best to figure out what could be happening here, but there is some sharp movements out here in Sun Pharma. You'll keep on seeing those gyrations because people who might be knowing, gone short, maybe some covering, so therefore that drop to 20%, then a pullback to 14%. I confess, I don't think any of us out here would be equipped or to be able to say as to where the stock could rest because quite frankly, no news yet on the wires or otherwise or on the Bloomberg terminal as well, which speaks about why this could be happening. But there is a big drop in Sun Pharma as we speak, 13% now. So very volatile, yes, but sharp drop in the stock price and sharp uptick in volumes for Sun Pharma.
I think we should try and figure out, this has been the biggest drop since I think before 2000 is what I believe it could be, because it's recovered now, but from that 20% knockdown that we've seen, the stock has come up 13% but nonetheless a steep drop, a one-way cliff drop for Sun Pharma on those volumes. 12.36 million shares have been traded on the counter. Remember, the first signs of the corporate governance issues came about with that whistleblower report that came in, and that's the time the stock tanked heavily. Post that, there was some damage control being done by the management, but the market regulator SEBI, they had raised queries with regards to Sun Pharma seeking details about those alleged transactions, but don't know whether this is in context to that or no, but it is definitely a big sell-off that's come into the counter, and we'll keep monitoring that stock. Though it's recovered now from the lows, it didn't look like a flash in the pan downtick because it was over the last few seconds about 20% and then it recovered about 10%.
Okay guys, there's some release which has come on the stock exchange's website. I've just tried to access that. In fact, the release says there has been a release of 19.3 lakh equity shares pledged in favor of ITBI Trusteeship Services Limited as a trustee for schemes managed by Kotak Mahindra Bank. So in a sense, if you look at this release optically, there has been a release of pledge which is usually viewed as a positive sign by the market. I don't know if there is anything besides this release of pledge which has just come on the stock exchange's website, that 19.3 lakh equity shares has been released which were pledged in favor of ITBI Trusteeship Services. Let me tell you, the promoter holding of Sun Pharma is somewhere about 59 or something, which I know. It's 54.3, out of which nearly 11% of the promoter holding has been pledged. So out of which 19.3 lakh is something which has just come on the stock exchanges. Neeraj, at one point of time, no, it is not a big number. I'm not saying it is a big number. It's just the latest release which has come on the stock exchanges. There is no other news which is in the market. 21% at one point of time the stock had fallen, and it's recovered at least from the lows. It's now down nearly 8-9%.
No, it's very difficult. So very difficult to put a handle as to what is the exact piece of news, because we confess out here there is nothing that's come up as of now. We'll wait and watch what happens here. There's a bit of a recovery, yes, on the stock. Let's see. Sun Pharma Advanced Research is the other one which has also cracked about 6.5. Nothing as compared to Sun Pharma. Not as liquid, of course, not in the F&O markets, and therefore, but a bit of a pullback for Sun Pharma Advanced Research as well. Having said that, it still stays under pressure, down about 10%. Well, maybe take a break and come back.
Is also recovered.
Maybe take a break and come back and try and make sense. There's a lot of index stocks which are cracking big time in trade today. Index itself is now trading at the lowest point of the day, so keep that at the back of your mind. The Nifty 50 is down 1%, 1184 now, very close to the 100-day moving average, I reckon. And the Nifty Bank too, about 1% lower. So under pressure, the markets. We'll come back from a very short break and try and talk more about some of these very active stocks. Stay tuned to Bloomberg Queen Live.